Good morning, students. How are you? Hope you all are fine. Okay, shall we come back to our lesson? Okay, today's lesson about in partnership accounts interest on capital. Okay, so we have to calculate the interest on capital. Okay, here already one video it was deleted in between. Okay, it was stopped in between. So second time I am recording. Okay. Here, interest on capital, we should know why we should provide this interest on capital. Because this interest on capital is given on the opening capital. Okay, then if there is any additional capital also, the business has to pay this interest on capital and it will be transferred to the partner's capital account. Okay, if this interest on capital is an expense for the business, so it will be debited interest on capital. Okay, we have already learned in the beginning of this chapter, interest on loan, the rate of interest on loan will be given in the partnership deed. Okay, and that interest on capital is also that is distributed from the profit of the business. So if there is no profit for the in the business, then that year no interest on capital will be provided for the partners. Okay, so there must be sufficient profit to distribute the interest on capital. Okay, why we give this interest on capital for the partners? So in order to differentiate the partner who contributes more and less. Okay, so the more those who have contributed more for the business as capital, they will be given more as interest. Okay, that is one of the purpose. So first of all, we should prepare the journal entry. Journal entry, I have told you, interest on capital is the expense, so we should debit, and partners capital account should be credited. Okay, so here if there are two partners, we should write that partner's name then capital. Okay, Tamil and Ben's capital account. Okay, like that. Then interest on capital provided. The second entry, two entries. Okay, one for providing, one for transferring that interest on capital to that profit and loss appropriation account. So we have to debit profit and loss appropriation account and credit interest on capital account. Okay. So we will see that that illustration. I will show you the illustration. Illustration 5. See, Manan and Ramesh share profits and losses. Ratio of 3:1. Okay, here 80,000, 60,000 opening capital. Current account balances are also given and interest on capital percentage given 5%. So here, why they have given the current account? We have learnt in the previous heading that current account will come in which method? Fixed capital method. So all the adjustments will be done in the current account. So when we pass journal entry, instead of capital account, we have to use current account. Okay. So first we have to calculate. That is the question. Calculate interest on capital. Okay. And show the journal entry. So first it is written calculated. Okay. Calculation of interest on capital. So interest on capital formula, amount of capital into rate of interest. Then first for the first partner, interest on Manan's capital. What is his opening capital? 80,000 into 5 by 100. Then interest on Ramesh capital, 60,000 into 5 by 100. Okay, we have calculated. Now the second part of the question, show the journal entries. So journal entries you prepare. Here journal entry, interest on capital account data to Manan's current account, Ramesh current account. Okay, so in the date written. Then amount here 7,000, for each partner 4,000, 3,000. Then the next journal entry, transfer. Profit and loss appropriation account data to interest on capital account. Interest on capital closed. Okay. Now you see sixth one. Okay, Anthony and Akbar were partners who share profits and losses in the ratio of 3:2. Balanced in their capital account, opening capital. Okay, 60,000, 40,000. Then 1st April, Anthony introduced additional capital. So for this 10,000 also we have to calculate interest on capital, same percentage, but number of month will vary. This is not for 1 year. He is introducing on 1st April. So from 1st April onwards. So April we have to take, isn't it? From April to December 9 months. So 9 by 12 we have to write. Okay. Then Akbar introduced additional capital of 5,000 during the year. Here during the year given, here date is not given. So what we have to do? We have to calculate as average month. Okay, 6 by 12. We do not know whether it is in the beginning or in the end. Okay, so at average we can take 6 by 12. Okay. So you see calculation of interest on capital. First, interest on Antony's capital. On opening capital, how much? 60,000 into 6 by 100. Then on additional capital, 10,000 into their same rate. Okay, 6 by 100 into 9 by 12. Understood? 9 months from 1st April onwards. Okay, April, May, June, July, August, September, October, November, December. 9 months. 9 by 12. Okay, then add and keep. Then the next partner, Akbar's capital. Opening capital 40,000 into 6 by 100. Then additional capital here during the year. That is why we are taking for 6 months. 5,000 into 6 by 100. Here they have asked us to calculate interest on capital. That's all. They have not asked you to prepare the journal entry. Okay. So shall we do the exercise? Okay, 5th exercise. Manan and Ramesh share profits and losses in the ratio of 3:2 and their capital on 1st April. Manan 1,50,000, Ramesh 1 lakh respectively. And their current accounts show a credit balance of 25,000 and 20,000 respectively. Calculate interest on capital at 6% per annum and show the journal entries. Okay, so first we have to calculate the interest on capital. Calculation of, first we will write the number. Okay, 5. Calculation of interest on capital. First, on Manan's capital. How much Manan's capital? 1,50,000 into, what is the rate? 6% by 100. Here 2 0, here 2 0. Okay, here how many zeros available? 2. 5 6 are 30. Balance 3. 1 6 is 6. 6 plus 3, 9. Okay, then on Ramesh capital. Ramesh capital 1 lakh into 6 by 100. 0 0 0 0. So okay, 6 into 1,000, 6,000. Okay, now we will prepare the show the journal entries they have asked. Okay, so we will show the journal entries. Journal entries, we have to write the heading. Okay, journal entries. Draw the column. Okay. To amount column. And LF also will be there. You write as it is. Okay. Then date. Okay. Date. Particulars. Only you write. Okay. LF. Debit. Credit. Then rupees income. Okay. Now, what is the first entry? 2 entries we need to write, isn't it? First one, date is given. Yes. Okay. 31st March 2019. So, 2019 March 31. Okay. Here, what is debited? Interest on capital account? Debit. Interest on capital account. debtor to Mannan's current account. Okay, here current account, not capital account. To Ramesh current account. Interest on capital provided. Okay, what we have calculated? 9,000 and 6,000. So total 15,000. Okay, here 9,000. Here 6,000. Okay, one entry over. Now second entry, the same date. Okay, transferring to profit and loss appropriation account. Okay, so what should be debited? Profit and loss appropriation account debtor. To interest on capital account. Interest on capital transferred. Okay, you write fully. Okay, 15,000. Here 15,000. Okay, that's all. No, 2 journal entries. Okay, then we will see the 6th exercise. Okay, 6th exercise. Prakash and Supriya were partners who shared profits and loss in the ratio of 5:3. Balances in their capital account on 1st April. So, opening. Okay, Prakash 3 lakh, Supriya 2 lakh. 1st July, Prakash introduced additional capital. Supriya introduced additional capital. Okay, during the year. Okay, here no date given. Calculate interest on capital. Okay, for the year ending 31st March 2019 and show the journal entries. First, we have to write the calculation of interest on capital. Okay, first we will write the number 6. Okay, calculation of interest on capital. Here 2 capital. Okay, opening capital and additional capital. Okay, first who is the partner? Prakash. On opening capital. Okay, what is the opening capital of Prakash? 3 lakh. Into rate of interest 6% per annum. Okay. 20, here 20 we have to cut. Okay. So 3 6 are 18, then 3 0, 18,000. Now on additional capital. Additional capital. How much he is introducing? Prakash introduced. Okay, Prakash introduced 60,000. Rate 6/100. Then when he is introducing 1st July, when it is ending 31st March. So July we have to include as 1 month. Okay, July, August, September, October, November, December, January, February, March. So here 9 months. 9/12. Okay, we will simplify. 3, here 4. Okay, this 2 0. Then here 2 we can give, isn't it? Here 2, here 3. Again this 2 we can cut and here it will be 3 2s. So 300. Okay, here how much? 3 into 3, 9. 9 into 3, 27. 27, then 20, 2,700. So what is the total? So 20,700. Okay. Now we have to calculate for Prakash and Supriya. Okay. Supriya. On opening capital. Okay. What is the opening capital of Supriya? 2 lakh. Into 6 by 100. Okay. 2 6 are 12. Then 3 zeros. Then on additional capital. Additional capital, how much Supriya is introducing? 30,000. Then rate of interest 6 by 100. Here date is not given. Here given during the year. So we will take 6 by 12. Now we will simplify. Okay. 1 6 is 6. 2 6 are 12. Here 1 2 is 2. 3 2s are 6. Then 2 zeros. Now 3 into 3, 9. Then 2 0. Okay, 900. Okay, so what is that total interest on capital? 12,000. Now what is the next question, part of the question? And show the journal entries. So we have to show the journal entries. Journal entries we have to show. Okay, draw the column. Date, 2 journal entry. Okay, then 2 amount column, then 1 small LF. Okay, date, particulars, LF, rupees. Okay, date, which date? Last date. Okay, 2019 March 31. Okay, interest on capital, account debtor. 2. Partners capital, isn't it? Prakash capital. 2. Supriya's capital account. Okay, interest on capital provided. Okay, how much interest? We will write Prakash interest on capital 20,700. Supriya 12,900. So total we will write here. Okay, 0 0 9 plus 7 16. Balance 1 3 3 33,600. Then second entry, profit and loss appropriation account. Debtor to this interest on capital account. Okay, interest on capital transferred. Total amount 33,600. Okay, 33,600. That's all. Okay, the problem gets over. You have to show that you have to refer the illustration and you have to do this exercise in your notebook. Okay, thank you, students.